Okay, I see you. This is your winning season. You are making the most money your business has ever made. All things are working together for your good. There's only one little detail you've overlooked. You don't have a tax plan. Unfortunately, that extra $5,000 or $50,000 isn't all yours. The IRS is looking at you like D-Bill on Friday saying, that's my money. Today, I'm going to give you 5 ways to avoid a huge tax bill when your income skyrockets so you can fight back instead of looking like Red running to his car, all right? Hey there, I'm Jean Tony, your business finance coach and enrolled agent, here to help service-based entrepreneurs like you make, manage, and multiply your cash flow. So without a tax plan, your winning season could turn into a losing battle, leaving you with a huge tax bill. And that's what we're going to talk about today, all right? Because too many entrepreneurs learn this the hard way. But I know you're going to watch this video to the end. So that's not going to be your story, right? Whether you've just had your first $5,000 a month or scale to $50,000 a month in 1 year, I'm going to help you stay ahead of the curve so that your winning season doesn't turn into that tax nightmare, all right? I'll show you the steps you could take to avoid penalties, maximize savings, and keep more of what you earn. Now, why is this important? I want to talk to you about why sudden success can be a tax trap, okay? When your income jumps, so does your tax liability. That's because we have a progressive tax system in this country, which means the more income you make, the higher percentage you pay, right? So let's say you go from making $5,000 a month to $15,000 a month. That extra $10,000 isn't all gravy. A chunk of it could have even pushed you into a higher tax bracket, which means you could be looking at a bigger tax bill. So, what's the solution? Just like you have a sales and marketing plan for the year, I want you to also include a tax plan as you map out your business plan for the year. Okay? It is entirely up to you whether you leave yourself open to higher taxes, penalties, and unnecessary stress. You don't want the IRS to come raining on your parade when you out here trying to make it rain. Well, a tax plan is going to help you keep all of that in control. So I'm going to tell you about one beautiful client that I had inside and out. She's just a beautiful person. She was making about $230,000 a year when she came to me, okay? Was living on cloud 9 until she learned the previous year she owed close to $20,000 in taxes. Now the year before she made $230,000, I think her business was doing like around $80,000. Okay, so she went from $80,000 to $230,000, got hit with this tax bill. You know what she did to avoid paying that? She came up with all kinds of deductions to write off nearly all of her income. The tax preparer helped her just make up stuff. So she wrote off nearly all of her income. So then guess what happened? I'm sure you guessed it. Of course, now she's making the money. She's got the cash. She wanted to buy the house, right? Well, when it was time for her to buy the house that she wanted, her mortgage guy said she couldn't afford it because on paper, her business made no money. So they had to jump through all types of loops to try to get her to qualify. All right. Now, what could she have done instead? She could have created a tax plan to help her do these 5 things I'm about to share with you right now. Okay. Number 1, she could have made sure that she had the correct business structure. Here's the deal. As your income grows, your business structure needs to grow with it. You don't just get an LLC and just fix it and forget it, okay? This is not a crock pot. If you're still operating as a sole proprietor or an LLC using that Schedule C, you're making over 6 figures, more than likely you're paying more than your fair share in taxes that you need to be, okay? This could be the perfect time to evaluate your situation and switch to an S corporation, which at least helps you save thousands on your self-employment taxes. So evaluate your business structure and see if it's time for you to make that move from an LLC being taxed as a sole proprietorship to a LLC being taxed as an S corporation. All right. Number 2, maximize all legal deductions. That's something that she could have done as well. All legal deductions. Deductions, which are also called write-offs, reduce your taxable income. So if your business revenue is $230,000 and you have $100,000 in write-offs, your taxable income is now $130,000, right? The IRS will multiply your taxable income, that 130, not your business revenue, the 230, by your tax rate to get your tax bill. Make sense? Without a plan, you're likely leaving money on the table because you're not maximizing your deductions. You don't have automated systems for tracking everything, for tracking all of your legit expenses, business expenses like mileage, software subscriptions, or even contractor payments. I have seen real estate investors so busy ripping and running that they forget that they paid someone $6,000 back in the spring of last year, right? So now it's a whole year later and you're forgetting that that you had $6,000 in expenses that you're missing out. That's a legit deduction that could have really helped lower your tax bill, but you miss out because you don't have your systems automated or structured. This is a really, really a common issue, all right, with service-based entrepreneurs. Well, with all entrepreneurs, actually. So that was number 2. Number 3, the third area she could have focused on was maximizing all tax credits. So number 2 was maximizing all legal deductions. Number 3, maximizing all tax credits. And listen, if you don't know, now you know. Tax credits are a game changer. If you really want to work this tax code to your advantage, you want to look at what tax credits you're eligible for and try to build your business plan around your tax credits. I highly encourage that. They are just that good. Let me explain, okay? A tax credit reduces your tax bill dollar for dollar. So you know how I just told you that your deductions reduce your business revenue to get you to a number called your taxable income. Then the IRS comes in and multiplies your taxable income by your tax rate to get your tax bill, right? We just went over that. Your deductions are only going to reduce a percentage of your tax bill. That's what we just covered, right? So let's say you owe $10,000 on your tax bill. And because you hired the right kind of person or your office is located in the right part of town, the government will give you money because the tax code favors job creators and investors. And guess what, homie? That's you. That is you. So let's say they give you $3,000 in tax credits, okay? You got to claim your status. You got to claim this, okay? Well, your $3,000 tax credits will take that $10,000 bill and reduce the entire thing down to $7,000 straight off the top. That is a game changer. Your tax credits are literally money in the bank. If you don't know about these, you're paying more than you have to. I promise you, you're paying more than you have to in taxes, all right? And the fourth area that a tax plan could help her address is legally shifting her income to a lower tax bracket. Now, what is income shifting? Income shifting is something that allows you to legally distribute income from your higher tax bracket to your lower tax bracket family members. So it allows you to take your income, like she could have taken her portion of $230,000 and paid her kids or her spouse a portion of that money to do legitimate work in her business. And that would have helped her reduce her income, her taxable income significantly. Okay. But of course, you need a plan to do it right. And number five, she could have avoided penalties for not having a plan. So finally, let's talk about this last section here. Without a tax plan, you risk underpayment penalties, you risk failure to file, failure to pay penalties, or even worse, falling behind on your taxes altogether. It's so easy, like I was saying before, to let 1 year become 3 years you behind on your taxes. And now all of a sudden you're behind 5 years on your taxes. These penalties add up fast. I mean, they come quick and they definitely can hurt your cash flow. So those are the 5 areas that at a minimum that your tax plan could help you minimize your tax bill as your income skyrockets. Okay. Sudden success is exciting. I get it. But let's make sure your winning season doesn't come with a side of regret. This is why planning is everything. So, what can you do? You're probably thinking, I need to hire someone and just let them take care of it. But here's what I recommend you do instead, okay? Because I know it's tempting to just delegate this all. Get an understanding of your financial situation for yourself. And yes, then also hire a tax professional to help you sort this out. But listen, I know you're really good at what you do and you would prefer to stay in your comfort zone. Maybe you would prefer to just let somebody else handle this all together and you not even touch it. I get that, and on top of that, the temptation is there because you're making money so you can pay for the help you want. But my advice to you is to slow down. Make sure you also know what's going on in your business. You need to know what your profit margins are. You need to know what your estimated tax payments are, when your estimated tax payments are due. Because at the end of the day, this is all your responsibility, not your accountant's, okay? I know you're busy and have a lot of things to do and a lot of things that you enjoy a lot more than worrying about business finances, business taxes. But because you're making these moves, your business, your vision is demanding you level up and become a financially savvy CEO. And I know, they don't teach this stuff in school. You're supposed to just wake up, start a business, and all of a sudden become a tax expert, all of a sudden become a bookkeeper. And it's not fair. It can be a lot to manage. So if you're looking for a step-by-step guide that's going to break your finances down in manageable pieces to help you get your entire financial life together, take a look at Fix My Finances. The link is in the caption, okay? And then let's hop on a call after you've gone through it. It's broken down into one area of your business finances each day over the course of 7 days. So you have the clarity and confidence you need to make sure your winning season stays your winning season. You don't have to take an L and get knocked out when it comes to taxes, okay? You can control how much or how little you pay, but only if you have a plan. If this video opened your eyes to how taxes can impact your success, you're going to love my next video then on how to set up an S Corp for maximum tax savings, okay? So click here once this video is published to keep learning how to grow your business without losing your profits. And remember, subscribe to the channel, turn on your alerts so you get the notification when all of my teaching videos go live, all right? Thank you so much for watching. Take care.